Don't give up, you know it's true. You gotta do what you wanna do.
Hello, welcome to UPSC Gangsters. This is Arjun Aryan. I'll be taking you through the business news and economics related news in the Hindu newspaper. Alright, so let's see what's up for 23rd September. Alright, so I'll start with the first topic. The first news piece, the heading says, Center to hasten GST refunds. Subheading, Government virtually rejects exporters' claims of $10 billion in funds getting blocked. Alright, so this is the follow-up of the previous news that was related to the GST refunds getting delayed. Alright, so the GST is actually based on a type of taxation that provides you refunds. Alright, after you have paid the taxes at each level, finally you'll get the refund. Alright, so this is supposed to encourage people to pay their taxes on time and pay the taxes for whatever they are doing. Alright, else you will not be getting the refund, right? So this is supposed to encourage a lot of people to pay their taxes. But what is happening right now, the refunds are getting delayed. Alright, for the month that has been paid, the refund has not been credited yet. So that has been there has been a lot of pressure on the government to release the funds. Alright, so let me start with the news. In the meantime, the state and union government authorities have been asked to clear the pending refund claims of central excise and VAT for the pre-GST period so that exporters will get immediate relief. So the thing here, what we come to know is the previous central excise and VAT refund claims, alright, which is supposed to be refunded, even they are not been done yet. Alright, so the union government is asking them to clear that first. Alright, the previous regime, the refunds that are pending on the previous regime, the central excise and VAT. Alright, so that first of all, please clear those arrears so that the exporters will find it comfortable. Alright, next point. Ganesh Kumar Gupta, President, Federation of Indian Export Organization (FIEO), said the projection of the refunds was made looking into merchandise as well as the services export sectors. So the main accusation of the government was these are blown up figures by the export people, right? Those businessmen and the business houses. And what they are saying is we have considered both merchandise exports as well as services, and that's why the $10 billion thingy. Alright, so that is why they're finding it really hard to carry on their business. They have included services too. Alright, and you know the services sector thing, right? So it is different from manufacturing sector. Services sector actually looks into those products that are given without any physical value to it. Alright, so services sectors example would be telecom operators, software operators and all that. So those are basically services sector, and services sector is supposed to be the biggest sector in India. Alright, the largest sector in India by GDP terms. Alright, so rejecting that or ignoring the service sector's contribution, that is kind of, I don't know why they even think about that. The government, I mean. Alright, so anyway, let's get to the next point. Alright, but do note it, alright? So service sector actually occupies the majority of the contribution to GDP. Alright, so that you should remember. And it was included, and the services sector was included when they have provided the estimates. Next point. He, however, welcomed the centre's decision to allow refund to the export sector based on GSTR 1 and 3B as proposed by FIEO. He said, expeditous settlement of refund claims of the central excise as well as VAT will add to the liquidity flow of exporters. So what they are basically saying is the government is actually kind of ready to refund the GSTR 1 and 3B parts. Alright, so that would give you the majority of the amount back. That would refund the majority of amount back. All right. So the export union, all right, they have welcomed this decision. All right. So this means what? They have to file the returns very soon. Those people who haven't filed their returns yet for the GSTR 1 and 3B, they have to almost file it immediately. All right, to claim the credits. All right. So this is what this news piece is about. Let's go to the next one. Next one, the heading says SBI unveils bond index at LSE, meaning London Stock Exchange. Subheading: Bank aims to offer international investors reliable benchmark in bond market. This is the subheading. So let's get to the news directly. The State Bank of India has introduced the FTSE SBI bond index series in partnership with the global index provider FTSE 100, which the bank hopes would give investors, some from India, UK and globally, tools to analyze India's government bond market and drive growth in this market. This is the first point under this. So SBI has introduced a bond, all right, with a global index appeal, so that they have introduced a benchmark for it. Benchmark, what a benchmark is, all right. So let's see what a benchmark is. Benchmark bond is a bond that provides a standard against which the performance of other bonds can be measured. All right, it is like a standard with which you can see, how much this particular bond of a particular company is performing. It is like a national average or something like that. All right. So when you have a standard, you have to have a standard, right? You have to have you should have a standard to kind of compare it with the other things. Only then you'll know whether this particular thing you're trying to compare is performing well or not. All right. So we have launched our own benchmark here. So next point with the news piece, the point says, with the launch of this index along with the FTSE Russell, our intention is to give people a benchmark on which they can make investment calls, said Arundhati Bhattacharya, Chairman SBI, at the unveiling at the London Stock Exchange on Friday. Alright, so this is what basically it's gonna do. So international investors can look into the benchmark that has been provided in this, alright, and see which companies in India are performing good or performing whatever way they are expecting it to be. Alright, and based on that they will be investing. So this will hasten the investment process and it will clear a lot of confusion. Is what she is saying. Alright, next point. With respect to the Indian government bond market, we didn't have any international indices on which international investors could take a call as to whether they would like to come in and invest. So understood the same point. Alright, so international, there are people who wants to invest in India, but they're not kind of sure whether it's going right or not. For especially when people are trying to invest in the companies that are coming up, that are newly coming up. Alright, those startups and all that. So startups, it's where the real innovation and all those things happen, right? So if they want to know whether those companies initially are performing well or not, is it safe to invest, they should have a benchmark. Alright, they should have a standard to compare themselves with those companies' stocks with the benchmark, so that they'll get to know whether the company is kind of safe to invest or not, which was not available until now. Alright, now it is there. So next point under this, with respect to the Indian government, same point I'm saying. Next point, there is a lot of capital wanting to come into India, but what we lacked was enough depth in terms of the various types of products. It is important to have benchmarks on which people can rely. So this index, launched in collaboration with the London Stock Exchange, will ensure that international investors have a benchmark that is transparent, well governed, and something they can easily rely on. Alright, so this one is very reliable. So reliability is gonna bring you a lot of investors into India, more investors to India in the form of FDI. Alright, so that is the major aim of this. Next line, she said that there were no products as yet linked linked to the index, and that they would be working with the London Stock Exchange to get some products in. So the benchmark is a benchmark bond, alright, like an average that is taken, and no products are actually linked to it seems. Alright, and but they are in talks of slowly introducing products. Alright, so products will be linked to it very soon. Continue with the point. We have already approached the capital markets regulator in India to allow us to use this index in order to launch an ETF, she said, of the SBI's Assessment Management Division. So who is regulating the capital market here? It is SEBI. Alright, so they are the ones who are regulating the capital market and not the RBI. Alright, so next point under this, India is one of the youngest countries which is adding 1 million people to its workforce, so the dependency ratio is very favorable in India. And given that the macro parameters are very okay in India, we have no other direction to go but to go up and grow. It's the pressure of demographics that will make India grow. Alright, demographics, she means the young workable population. Alright, so we have the largest population that comes between the workable age, alright, that comes in the 30s. So that is known as that is exactly known as the demographic dividend. Alright, so this is a good factor, a factor that would work to our favor, she's saying. Alright, that is the fact anyway. So the workable population will engage in a lot of jobs and all that, and that is something the bank is going to be targeting, and that is something the international investment would also target at. Alright, next point, she acknowledged that Brexit posed a little bit of a challenge to SBI's plans for its subsidiary. We had hoped that when subsidiary was up and running, we could possibly use the passporting rights to have branches of the subsidiary in Europe, which at this time I think may not happen. We may want more in Europe, given that Europe happens to be one of India's biggest trading partners. So we will see what can be done. Alright, so because of Brexit, they are wary about what to do in Europe. Previously they were looking to expand in Europe, and this is based on London, alright, which is in England, Britain. So when they are like collaborating and creating a benchmark bond there, and Britain is actually kind of getting out of the European Union, so London Stock Exchange is the famous thing around in that place. Alright, so it is more trustworthy. So if there was another European Union based stock exchange, we have to collaborate there as well. Alright, so that would help probably SBI's chances to kind of spread their wings in Europe through the entire European continent. But as of now, those things look kind of bleak because of the Brexit situation. Alright, next point under this, she said SBI has gained in two areas from demonetization: the huge increase in resources that enabled banks to bring down the lending rate by almost 100 basis points, which is 1, alright, 0.1 it is, 100 basis points, and the jump in digitization that had resulted in about 3 years work happening in about 60 days. Alright, so digitization has improved the speed with which works gets done. Alright, so previously those things that take 3 years and stuff, they are getting over by 60 days as of now. Alright, so that is a big huge improvement. And one more thing what she's suggesting is the bankruptcy code, alright, that has been introduced. that also is favorable for investment. That is what she feels. And what the bankruptcy code is all about. The bankruptcy code outlines separate insolvency resolution processes for individuals, companies, and partnership. All right. So there is separate resolution mechanisms for individuals, companies, and partnership companies. The process may be initiated by either the debtor or the creditors, and the maximum time limit has been given in this case. All right. So the bankruptcy thing, the settlement and everything should be done within a proper time frame. All right. The time will be set when it goes to the authority. All right. So when the time is set, they have to finish it no matter what. This is something that was not available previously. All right. So this was one of the reasons the investors were kind of feeling wary of investing in India. But right now it is not there because of the advent of the new bankruptcy code. All right. So when the maximum time is given, you have to settle all the processes. And for companies, they have also given a specified time in this bill. So it is supposed to be 180 days for companies. All right. So within 180 days, everything should be settled. All right. And it may be extended for 90 days. So it is like somewhere between 4-5 months. All right. So everything should get over within 4-5 months at an average. So that is what they are saying. So if a majority of creditors agree, it will be done earlier too. So for startups, small companies and other companies, resolution process would be completed within 90 days of initiation of request, which may be extended by 45 days for small businesses and medium enterprises and all that. For them, the days are for 90 days. All right. So 90 days for small businesses, and it's gonna be 180 days, double that. All right, for the normal big huge businesses houses. So please make a note of this. This might definitely come for your films. So the number of days that has been the number of days within which the settlement has to be reached. All right, under the bankruptcy code. For small businesses, it is actually 90 days, which can be extended by 45 days. All right, and for normal big businesses, it is supposed to be 180 days. All right, with an extension of 45 days again. Extension of 90 days. All right, so it's exactly the double for it. All right, so it's exactly twice. Easy to remember. All right. So this is all the things that you should be noting under this news piece about SBI introducing a benchmark bond. Alright, let's get on to the next news piece. Next news piece, the heading says, Tap services potential to aid world economy. Subheading says, Asia, Europe must drive services trade. So we were just talking about services. Alright, so the service sector, software, telecom and all that, where an actual physical product is not produced, rather you are actually giving the services to somebody, to the customers or to the other company or whatever, whomever is purchasing or buying from you. Alright, so Asia, Europe must drive services trade. That's what the subheading says. Let's get on to the first point. India, which has proposed a global pact on trade facilitation in services, TFS, has called for tapping the full potential of the services sector to boost the world economy. Alright, so India has actually proposed, so this is very important, you have to remember this. India has proposed for a global pact, alright, for facilitating services. Alright, so as of now, there are no global pacts that are dedicated for services alone. And why is actually India hell bent on creating a global consensus on services? Why? Because our economy is majorly dependent on the services sector, like I said. Alright, so the major percentage of the contribution to GDP comes from the service sector, and that is why we want to utilize the best part of it. Alright, the most of it we want to just juice it out, so that we can reap the benefits of it. Alright, so that is why we are looking into an international consensus when it comes to the service sector. Alright, next point. Commerce Ministry Suresh Prabhu representing India at the Asia-Europe meeting, ASEM, Economic Ministers meeting in Seoul. So, the ministers from the economy side, alright, the commerce and industry side of the respective nations, they are meeting up at a place called the Asian Europe meeting. So, Asia-Europe meeting is actually based on what? It is an economic meeting, gathering, alright, so that you should remember. It is an economic meeting, alright, it is based on economic things, alright, economic decisions that are supposed to be taken and economic cooperation, alright, so that you should remember. They might ask you, they might quiz you by saying it is based, it is about something else. So, they said on Friday, Asia and Europe must look at ways to boost services trade, which has a multiplier effect on job creation. This is obvious, this is a straight point. You increase the footprint of services sector, jobs would increase. Obviously, they would need more jobs, and due to the demographic dividend we hold, we will really benefit from it. Alright, so India had submitted to the World Trade Organization a proposal for the TFS aimed at easing norms, including those related to the movement of skilled workers across borders for short-term work, to boost global services trade growth. So this is important. What is the major proposal here is movement of skilled workers across borders for short-term work. Alright, before, I mean, you would have heard that for short-term work, non-skilled workers go. Alright, like how people from Kerala or from South India go to the Gulf countries. Alright, so they are essentially laborers. So they are essentially non-skilled workers. But skilled workers, it should be easier for them. The terms and conditions should be much more better for them. Then you could actually kind of send people there to those European countries or whatever, get the training there, come back here and give the service to whatever industry they are working under, and they can improve the services and give cheap services. Alright, so that way these things will improve the jobs. So when increased border regulations are happening in the US, they are trying to concentrate on Europe. This is a very good move what they are doing. Alright, so Europe, you have to kind of Europe has a bigger market, right, to if you put entire Europe together. So if that is the case, if India can tap into that, it is kind of good. Alright, it actually balances what USA is trying to do to the entire world. Alright, so that way we can compensate stuff. So, movement of workers across borders for short-term work to boost global services trade growth. India is keen that the TFS proposal gains traction before the WTO's ministerial conference in December in Argentina. So, see, like I said previously, ministerial conference is the important one. The leaders' conference is important too, but the ministerial conference is where the real work happens. Alright, so that is where the ministers of the respective ministers or the secretaries of the respective ministries or the secretariats of the respective countries meet. Alright, and that is where all the important decisions formally are taken. Alright, so the signature is done and the formal plan has is decided between those minds. Alright, so essentially the civil servants of the each countries of the respective countries will also be present. Alright, so the consensus will be reached and a plausible plan will be rolled out. Alright, so when these things happen, this is about conformity. Alright, so this is really important and India wants this to gain traction. They want this to get famous and all. Alright, before the ministerial conference in December in Argentina, WTO's ministerial conference. So by the time if this thing gets going on and it gets some traction and momentum, there will be a lot of countries that are joining in. We have done this in the past already. Alright, when it comes to the differentiated responsibilities in UNO and all that. Alright, when India raised its voice to, participate, I mean to bring all those well-developed countries to contribute more to the climate mitigation efforts. Alright, so when Manmohan Singh came forward to propose something like this, it was not the first time he did that, because he did that in other small organizations, I mean other cooperative bodies too. And after that he finally pulled that out in UNO. So when he did that, there was enough support for him already. So when he did that, people supported him, and the resolution was passed about the differentiated responsibilities. So same way they're trying to do, and the other organizations, the meetings that happened related to trade, they are trying to build up some momentum and traction for this TFS. All right. So that is what this news piece is about. Let's go to the next one. Next news piece, the heading says government to strengthen Korea plus cell to strengthen FDI from South Korea. Subheading will leverage South Korea's technological prowess to support industrial growth in India, says Prabhu. So first point, Center to strengthen Korea plus cell. Commerce and Industry Minister Suresh Prabhu said the center was keen to facilitate more investments from South Korea and would strengthen the Korea Plus cell in this regard. Korea Plus is an initiative between the governments of India and South Korea to promote Korean investments in India. Mr. Prabhu said India's ties with Korea also assumed great significance in the context of India's pursuance of an Act East policy. Alright, so we have entered the policy of Act East from the Look East, they say. Alright, meaning that real agreements and real developments are happening as of now. So what is this about? What is the important point here? You should know about the Korea Plus, definitely. Alright, as simple as that. So Korea Plus is, they might quiz you in the prelims paper. What is the Korea Plus all about? Korea Plus, is it about a military exercise between India and Afghanistan, Korea and India, or Korea and Afghanistan and all that, because India is not mentioned in the title that is given. So it is just Korea Plus. They will say whether it is an economic grouping, or it is a military cooperation, or it is something that has to do with maritime security and all that. So when they ask something like this, you should know that it is about an economic cooperation body. So it is about South Korea investing in India, but it is about South Korea's increasing investments in India, how the FDI can be improved, how the trade between the two countries can be improved. That is what Korea Plus is all about. So we'll write these are the important points for the business and economics based news for the date 23rd September. I will see you soon for the next business news and economics news analysis from the Hindu newspaper. Take care.